who's joining in to discuss the recent spate of order wins and the business outlook. Mr. Patel, hi, thanks very much for joining in. Well, it seems as though the capex cycle is picking up. So give us a sense in terms of where exactly have you won these orders from? Which segment does it comprise of in terms of business for you? And what is it looking like in terms of future order book?
Yeah, these two orders which we have declared, one is about the repeat order from one of our clients for making food making industry. That's a needle making factory and an expansion of the factory which we have already done last year. So 115 crore comes from that factory, and the second order is from again a repeat client of our precast plant, that is L&T. So that was an addition of further 50 crore, which totals to our precast order from L&T 295. So in general, what we have projected for this year to reach up to 2,500 crore new inflow of order, I think we have already reached to 1,500 crore. So probably it will be, as the market is going good and the economical cycle, the way that the country is developing, I think we are getting sufficient inquiries. Presently also we are having an order to bid book of about 4,000 crore. So reaching to 2,500 crore new inflow of order for this year is not going to be a big task. And presently also till June, our outstanding order book is about 5,500 crore. So keeping the same cycle of increasing our order book by 20% growth to our revenue, I think at the end of the next year, 2023, we should remain with an outstanding order book of about 5,000 crore, which will be sufficient for again next 1 and a half.
Mr. Patel, just to get some numbers in, you're saying your order book as of June was 5,500 crore?
As of June plus the order of this quarter.
Okay.
The new quarter, yeah, this quarter also. So I can't have, because the revenue which we have generated in July and August and September will be deducted from that 5,500 crore, because the orders which I am saying is 965 includes till today.
Okay, so this 5,500 crore is the current order book, which compares with 4,613 as of Q1 end, right?
Yeah.
Incremental
right.
900 crore. And this order inflow target of 2,500 crore for FY23, in Q1, your order inflows were just 550 crore. So you're confident that you will be able to achieve nearly 2,000 crore of order wins between Q2, Q3 and Q4?
Yeah, see, because if you see the total of order inflow for this year, till whatever order which we have declared and for which we are discussing, that is 160 crore, totals to 1,511 crore till today as a fresh order for this year. So probably we have to further go for further 1,000 crore for next 5 to 6 months. So probably I don't see that problem, because we have a strong bid pipeline of about 4,000.
Okay, so you have a bid pipeline of around 4,000 crores. And all this is, how much of that bid pipeline is repeat orders or from the same clients or companies?
So probably the order which I have declared is from the same client, and one of the orders which we are bidding again is from a repeat client, which is of a chocolate factory. So all other projects which we are bidding presently are not from the repeat client, but only one tender of 160 crore which we are bidding is from a repeat client.
Okay, I think I heard chocolate factory, if I'm not mistaken.
Yeah, chocolate factory. Yeah, chocolate factory.
That sounds even more interesting. But nonetheless, you had some labor issues in UP, and you were guiding for around 1,000 odd crores of revenue from UP in FY23. Can you tell us where things stand? Has it been resolved?
It was not actually a labor problem only in UP, as these 2 years were very heavy corona. March 20 was the first corona hit. March 21 was the second corona, which affected UP, BR to a larger extent. So both these seasons, both these years, these people were not able to go for any marriages and their functions. So probably this was the only year that they could go for such types of social gathering. So this time the movement of people in April, May was much more higher than what we have been expecting throughout our past career. So that was the only reason. But after June, the things have recovered and the labors are full and the things are going much on a positive line now. And there is no shortfall of labor as of.
What are the current margins you're enjoying, Mr. Patel?
Pardon me?
The current margins, we've seen a softening in commodity prices. So wanted to understand, have you been able to benefit from that, or do you have a fixed price structure What are the margins?
Mostly 50% projects are on a fixed price and 50% projects are on a prices which is passed through as far as the major materials like cement and steel and flooring materials are concerned. The projects which are on a fixed price, yeah, we had some impact during last year, just after Corona March 21. But again, the rates have come down, neutralized to the level what we have bidded for. So probably not much impact as of now because of these commodity prices. And as such, benefit out of getting reduction of that rate, we are not going to get because the tenders of UP which we bidded was in March 21. And then there was wait about 4 to 6 months. And then later there is in January 2022, the rates have stabilized.
Okay. What does all this mean for your balance sheet? Can you just give us a sense in terms of what your consolidated debt is on the books? How much free cash flow are you probably generating? How much is probably going to eventually go into debt reduction? What would you be comfortable with by the end of the year?
As such, our long-term debt is not more than 100 crore. And out of that, some of the things are as a WCDL. So each and every quarter we are reducing that. At the same time, whenever the money is required, we are utilizing more on from our FPO.
You know, recently you had said that you were looking or you were considering to bid for some DLF residential, which is a 1,000 crore project in Delhi. Have you made up your mind about it?
No, still that tender is in under process.
Okay. Could you give us a sense more about this government versus private breakup? I think about 63% of your projects are government owned. Do you think that mix will change?
Yeah, but that mix has already changed after March 22. So probably if you see the new on the current order book versus the past year's order book, there will be more probably near to 50-50.
Okay. Does that mean that receivables are better as well? And, you know, how exactly is the receivable situation across the government tenders as well as private if you had to compare it to, say, 2021?
Mostly projects in government, what we are doing, there is not much problem as far as receivables is concerned. Yeah, of course, private receivables is much better than the government, but your billing cycle is proper and if you are able to make the bills on time, I think not more than 45 days, the government money also receives on time.
And just one final word on this Bhiwandi project. I think it was stuck.
Yeah, that project is still stuck. We have asked for the arbitrations to start. So because of the 1 or 2 hearings been prolonged, so probably this hearing we may go for arbitrations to start.
Okay. All right, Mr. Patel, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is PSP Projects. The stock is higher by around 0.5% at this point.